want to make sure we're clear on that. But yes, let me explain the 29% product. In California, if you're over 48, you can't get it. It's California. We'll expect New York. You don't even have access to it. You have to be under 65 in most states. You need at least $75,000 to start the 29% bonus account. It is insured product, so you have the ability to add to it for 3 years. You do not extend your surrender schedule. You have a 0.95 annual fee. You only have access to 10% after the first year. And typically, you're going to make about 50 to 60% of the Transition 12 index, which is an amazing index that does over 12 to 13% annually over the past 26 years. So it's a great account. You're going to get fees 0.95. You got to be okay only having access to 10%. You can add to it and get 29% on every single dollar you put in whenever you want to automatically for the next 3 years. And it does not expand your surrender schedule, which is pretty amazing. That's why they only do it for 3 years, because they know people are adding money to it. What I love about the green money, though, the green money solutions has the ability to guarantee your money with reserves, dollar for dollar. The banks, they don't have reserves. They have 0.74% of your money in reserves, and they say it's reserves, and it's not. Basically, what it means is a trap. So that FDIC, they want FDIC stamp on their bank, meaning they only need 0.74 to claim FDIC insurance. Now, when they have FDIC insurance on the bank, they have a certain set of rules they have to abide by. One of those rules is basically forfeiting your asset to the bank. You heard me right. When you drop a penny in your bank and you deposit, you're certifying your deposit. Hence a CD, certificate of freaking disappointment, what I call it. Certificate of depreciation. You have completely lost control of your money, even in the checking account. The only thing you have access to is withdrawal benefits if the bank is solvent enough. But if the interest rates are dropping and they're not making returns, how long is it till they are not solvent? Are they too big to fail? Well, we saw Silicon Valley. We saw First Citizens. We saw First Republic Bank. We saw banks in 2023 crash like you wouldn't believe. We had a lot of banks, over 100 banks in 2018. The commercial real estate crisis is going to be worse than the sub-mortgage crisis in the lost decade from 1998 to 2008. This is going to be